Hello, I'm Alex Davies, founder of Wealth Club. Today I'm with Guy Ranawake, Investment Director at Ingenious. Hello, Guy.
Morning.
First off, can you tell me about Ingenious and a bit about yourself?
Sure. Ingenious, we're an alternative fund manager, a full-scope alternative fund manager, investing both EIS, business relief vehicles, and we invest our own money in the media, infrastructure and real estate space. My background, I am a qualified chartered accountant. I've been doing investment banking in the utility and infrastructure sector for about 20 years. And I've joined Ingenious about 3 years ago to be their investment director for their infrastructure EIS services.
So what does the EIS infrastructure service do for investors? What's its aim?
Well, historically we've invested a lot in clean energy, so wind, solar, anaerobic digestion, and more recently we've launched our ventures service, so still very much focused on the infrastructure space, which is for us energy, transport, digital and resource efficiency. And we're investing in small, medium-sized enterprises which are focused on developing and providing services to that sector.
What experience do you and Ingenious have in choosing the types of company you choose?
So we've been following the infrastructure sector since 2011.
Yeah.
We've deployed around £730 million to date to that sector, historically mainly in clean energy, as I said before. We have an investment team of 40 people, so we have got an excellent network of contacts within the sector, and within our group ourselves, we have legal support, technical and commercial support.
So give me some examples of companies you've recently invested in and the types of companies you are going to invest in when you get the EIS money.
Sure. Our first investment is in a company called Reactive Technologies. It's in the energy space. It has a really interesting technology which allows the transmission grid operators to measure what's called inertia of the system. As renewables are being added to the system and the old coal-fired, gas-fired power stations are taken off, the grid becomes more and more unstable, a reduction in inertia. And what this piece of technology does, allows the transmission or distribution operator to measure the level of inertia in real time.
Okay, and any companies you're looking to invest in?
Yeah, we've got a couple of companies which are at the term sheet stage, which we'd hope to announce in the next few weeks. The first one is also in the energy technology space. They've developed a technology which reduces the transmission losses in cables, both at the transmission level and the distribution network level, by 20 to 30%. So it's a technology which is very exciting that can be applied both on land, but also for subsea cables, for example, to offshore wind farms. The other opportunity is in the smart meter space. Once again, a company which has developed a technology which can measure the electronic signature of different devices in your home. So it can tell not only what make it is, what model it is, but also whether it's performing according to plan, whether it needs repair. So there's been a lot of interest from the energy companies who are keen to know before they send out a repairman to fix the washing machine, what is exactly wrong with the machine, to make sure that they've got the right person going to visit the house and also got the right piece of equipment. And both those opportunities, we've got very strong strategic interest. For the transmission company, we've got a distribution network operator who has signed up for the first deal. And then on the smart meter business, we have some of the big energy utilities who've already bought devices from the company.
So Guy, why is infrastructure such a good opportunity in your view?
We really like infrastructure because it has a lot of government support. The government has produced its clean growth strategy, the industrial strategy, and putting a lot of funds to make sure that the UK is Brexit ready. In addition, we see a lot of young companies with interesting disruptive technologies which have enormous growth potential, and we would like to give that growth potential, or give investors access to that growth potential through this particular service.
Of course, because of the rule changes, it's all got quite a lot more risky, and it's rather different, the investments you're choosing now than you would have been, say, a year or two ago. How risky is it, what you're doing, and what do you do to mitigate those risks?
So you're absolutely right. The new risk to capital condition that was introduced has meant that we've moved away from asset-backed, long-term contracted projects, essentially, like wind farms or solar parks, to investing in real businesses, so in management teams and their business plans. We are still very much focused on the infrastructure sector, so it's something the sector which we know and love. We're not going to be doing life sciences or biotech or the latest university spin out. So this is a sector which we know really, really well. We have a team of the management team has got many years of experience in investing in that sector, and we have a very rigorous investment process. So we have to go through a number of stages with our own investment committee to make sure that that they are comfortable with our proposed investment decision. We have an extensive due diligence exercise, both internal and external, which covers commercial risk, technical, legal, intellectual property. And once we move to the final documentation stage, we have introduced a number of corporate governance requirements in any deal that we do, which means that we have what's called negative control provisions. Certain decisions cannot be made by the company unless it explicitly gets our approval before they can do those particular decisions.
But how are you going to exit these companies? Is there a plan for that? And how long is it going to take? And sort of typical returns?
So all good questions. We typically have to hold the investments for a minimum of 3 years, unless we get a knockout bid which provides more value than the income tax break for investors coming into the EIS service. But we have advised our investors that we are typically going to hold these investments for 4 to 6 years. We are looking to return a minimum of 2 times your money, but when we negotiate deals with the individual investee companies, we're looking to return 5 to 10 times. So that gives us plenty of buffer, I think, in the event that not all the companies don't perform as well as expected.
Finally, I want to invest in an EIS this tax year. Why should I invest with you?
I think 3 reasons. We're sector focused, unlike many of the generalists out there. So we've been investing in the infrastructure sector since 2011. We've deployed a £700 million stake, so we've got an excellent network of opportunities. The team itself is very experienced. I've got 20 years of experience, 3 years of fund management experience, and supported by a strong technical, legal, and commercial team. And finally, I think we have the infrastructure sector itself. It has many opportunities out there as new companies are trying to disrupt the incumbents and apply technology to areas which have not had that sort of exposure, and which result in plenty of opportunities for new money to deliver the returns that we are hoping to give to investors going forward.
Guy Ranawake of Ingenious, thank you very much.
Thank you.